And it almost seems like it's inevitable, like we see it's coming, but when?
Our economy has to have debt to survive because money is debt.
Our whole system is built off debt, so if we don't continue to increase the debt, then it falls apart.
The government do actually create non-debt-based money. It's called cash and coins.
You had to have a certain amount of gold, a reserve, for the amount of money that you created.
Many economists blame the Great Depression on the gold standard because they couldn't create the amount of money that they wanted to create.
The pound is the most successful currency in the world because it's been around the longest.
Then you want the value of the currency to go down so that you don't have to repay a larger amount of debt each month.
Hey everyone, welcome to another episode of the Market Disruptors Show. Today I'm sitting down with Simon Dixon. He is the CEO and co-founder of Bank to the Future. He's also the author of a book also titled Bank to the Future, Protect Your Future Before Governments Go Bust. He talks a lot about the same type of content that I typically talk about, but I have a lot of questions for him. So I'm excited to sit down with Simon. Simon, thanks so much for joining us.
Yeah, thanks for having me. I've been consuming some of your content, so it seems like there's a lot of synergy. It's great to be here.
Yeah, thanks. Thank you so much. So, I've been, following you for quite a while, watching your content. And like I said, we definitely do line up on a lot of stuff. But for those that don't really know who you are, just give us a little background on what you've been doing and what you're up to.
Yeah, so I've been working around the subject of monetary reform for about 20 years. I started as an economist at university, did a master's there. Then I worked in investment banking. So I worked as a stockbroker. Then I was a market maker on the London Stock Exchange, and then an investment banker helping companies go public. In 2006, decided to throw in the corporate towel and return to economics and started giving lots of talks and content around unsustainable banking and money reform. But no one really cared. So then this big thing happened in 2008 called the financial crisis. And all of a sudden, people were interested. So that's when I came across somebody that I was writing my book, Bank to the Future, on how to drive more sustainability in the banking system. And I was introduced to one of the very first Bitcoin developers that had moved out of his house, sold his house, moved to a squat in London. And I went there and then spoke at the very first Bitcoin conference in the world. And just been involved in investing in the industry ever since, and founded the company banktothefuture.com to help people invest in the industry.
Yeah. So, you talked about in 2006 kind of leaving to go back and start talking about this unsustainable banking system that we have, unsustainable money system that we have. And so that's a long time. I mean, that's 14 years now you've been talking about that. I know I got kind of educated into like gold and sound money by Peter Schiff, and he's been talking about the same thing for a really long time. And it almost seems like it's inevitable, like we see it's coming, but when, right? I've been following Peter Schiff for a long time. You've been talking about this for 14 years. I understand the when is difficult, but it's like, the broken clock is right twice a day or whatever. Like it's unsustainable and we're moving towards this inevitable end, but like, how far can they move that? Do you think about that?
Yeah, I think about that a lot. And really, if you look at what our financial system works is, I call it the world's largest regulated Ponzi scheme. And really, we have these different cycles where our economy has to have debt to survive because money is debt. And so without debt, you can't have money in the existing system. And so you have these like 10-year debt cycles that lead to some kind of systemic risk event. So we had the credit crisis in terms of mortgage loans and subprime loans. But we keep getting these different events and then recycling the debt. So we have to find a new market for debt at every cycle. And I think that the government and the central banks have shown that they're willing to kick the can down the road for as long as they can because they don't believe in markets anymore. So they believe that the stock market should never crash. It should always go up. And every time it does crash, that they need to fill that gap. And they do that by either encouraging consumers to take on more debt, companies to take on more debt, by a central bank buying their bonds and then them pushing up prices. Or governments taking on that debt, or central banks taking on that debt through QE. But I think that we're going to hit rather than a systemic crash of the whole system, I think we're going to actually hit a monetary reform similar to what we saw in 1944 when we had Bretton Woods, and in 1971 when they went off the gold standard. I'm forecasting that we will see a monetary renegotiation before we'll see a systemic collapse of the entire system. And I think they've got a few more tricks up their sleeves to kind of roll it up a little bit further. And the implications, rather than allowing the financial system to collapse, is that a new monetary system will be created that will really affect your personal liberties, privacies, and freedoms. But they will be able to make it sustainable. And I think that I've got a few ideas on how they'll do that.
Wow. That's a great topic, and we are going to dig into that. But before we do, you talked about how our system is a debt-based system, and our money is really debt, right? And so our whole system is built off debt. So if we don't continue to increase the debt, then it falls apart. But our money is a debt-based system compared to what? What other money system is there?
Well, there are different forms of money in the economy. So I created a video once called 6 Forms of Money. One of them, the government do actually create non-debt-based money. It's called cash and coins. So the notes and cash in your pocket is not created as debt. It's simply created and sold to a bank when they need to. So if essentially when you print a note, it costs about 3 cents to be created by the Royal Mint or whoever it is in which country you're in. And if it was, say, a $10 note, there'd be $9.97 margin, and it's sold to a bank. And that profit of $9.97 reduces the amount of tax that one needs to pay. It's called seigniorage. And about 3% of the money supply is created debt-free by governments. It's added to Treasury's balance sheet, and it's a form of income. But the rest of the money, 97% of it, was outsourced to the private banking sector. And so the private banking sector, they create a digital currency every time they issue a loan. And it's a digital representation of the government's debt-free currency. So the cash and coins is a debt-free currency. And anything in your online banking is all a digital currency that's created by the private banking sector and backed by debt. If you rewind into history, you had things like in the American Civil War, Abraham Lincoln actually created a greenback, which was a debt-free money supply, and it funded the American Civil War. And so throughout history, there's never been, this absolute conclusion that money has to be created as debt. And in fact, if anyone was to engineer a financial system from scratch, nobody would come up with that solution. It actually was just through decades and decades of reforms, it actually turned into the financial system we have today. And many people confuse this. They think that debt's the problem. Debt in itself is not the problem. The problem is creating money as debt, which is the problem. So once you've got a money supply, you can use debt as a very legitimate instrument for people that want to put together borrowers and savers, like peer-to-peer lending or collateralized loans like we see in the crypto markets. But when you give someone simultaneously the ability to create new money every time they issue a loan, you end up in a Ponzi scheme where debt is required in order to have an economy. So there's these different schools of thoughts around monetary systems. Some people believe that you need to regulate how much digital currency a bank can create through Austrian economics and the gold standard. I go a step further, that I think you shouldn't allow banks to create money rather than using gold to regulate how much money they create.
Yeah. So if we kind of go backwards, and as you said, this has really evolved for a long time, but if we look at maybe some big monumental times throughout history, really we had, as you mentioned in 44, like the Bretton Woods Agreement. So the whole world was on a gold system. And so you had to have a certain amount of gold, a reserve, for the amount of money that you created. And then I guess even at that point, it was like leveraged, but at least it was somewhat backed. It wasn't 100% debt backed. I mean, is that correct? And then in 1971, we got off the gold standard and it became 100% debt backed. Is that how you see it, or is that?
Yeah.
Right?
So yeah, there was different forms of gold standard, and it evolved over time. But The most recent one was 40% backed by gold. And it was used as a mechanism in order to keep central banks and the private credit creation system in check,
Right.
because you'd end up losing all your gold if you had bad monetary policy. Then that was, but the problem with the gold standard is that it is inevitable, predictable, and guaranteed to be reneged on. Because if you many economists blame the Great Depression on the gold standard because they couldn't create the amount of money that they wanted to create.
Right.
And there's some truth in that, but there is another option, which is actually creating money debt-free rather than debt-backed, and competing with other forms of free money, more free market money. But yeah, and then in 1971, with the Nixon shock that was executed in 1973, we essentially moved to a US dollar debt-backed standard, and all currencies were traded against each other. So the financial system that we have today isn't actually that old. And if you look back at monetary history, with the exception of the British pound, which was a world reserve currency for about 300 years, on average, no currency has survived more than 50 years, and in fact, an average of 27 years. So we are due a monetary renegotiation, and throughout the 5,000 years of monetary history since gold has been around, we always get them.
Yeah. Yeah, they say the pound is the most successful currency in the world because it's been around the longest, but in terms of holding value, it sure hasn't done a very good job, has it?
No fiat currency has ever survived and never holds value. So there's none of them are a good store of value.
They're actually designed not to hold value, right? Because they're built with this inflation mechanism into it, so it's meant to lose value over time.
Exactly, and if you hold, like the US government, almost $30 trillion of debt, then you want the value of the currency to go down, so that you don't have to repay a larger amount of debt each month. That's designed into the system.
Right. So we have this debt-based system, and I think since 1971 or 73, when we got off the gold standard, we've created something like whatever $300 trillion out of debt, or whatever. And it seems like, as you just said, about every 10 years, we have this kind of monetary shock. And it's almost like this balloon tries to deflate, and then they have to pump it back up. And then it tries to deflate, and then they pump back up. But each time they pump it back up, it goes bigger and bigger and bigger. And you think that they still have a couple more pumps left, a couple more tricks left?
I actually think that this one, within the next 3 to 5 years, or even in the next year or so, you've got to time that with election cycles, because no one will do a monetary reform when they're about to be elected. So you've got to get through the next election cycle. And I'm talking about America because, 70% of all currency in the world is dollars, and 50% of all transactions are dollars. Right. So, dollars it affects everyone.
Right.
And so you've got to get past that. And then I think we're at a very interesting time in history. And in 2011, I uploaded a video to my YouTube channel called The Great Depression of 2020s. And it talked about this cycle of Keynesian monetarism economics, and then leading to the systemic risk events. And the video said it in 2020, I didn't know a pandemic was coming, but I knew that something was coming, because there's always a trigger. And then the difference is that each time, I think the appetite of what one needs to do. So what tools do we have? We don't have interest rates anymore. We have the central bank's balance sheet, and they've announced infinite, and that's working to keep investors into the stock market. Now they've announced infinite QE. But eventually you get some kind of, systemic risk event. I'm forecasting that it will be the end of some of the government subsidies that leads to more unemployment, more bankruptcies, and some of the loans that was just restructured, which are due to, if the last bit of bailout for US consumers was that businesses could borrow money, and if they agree to keep their staff and don't lay any off by the end of October, then they don't have to repay the loan. So a lot of people are keeping their staff on, not so that they don't have to repay the loan. And then I think it will lead to a lot of another spike in unemployment, which will then expose the weakness of the real estate markets, when at the moment, essentially all mortgages and real estate is being paid by the individuals that are living month to month because of these government subsidies. And so if some of those go, then it exposes some of the weaknesses in a couple of systems, the banking system and also the pension system, because the bank sold all their bad debt to your pension already during the last financial crisis. But when we have to rescue those systems, the options you have is a bail-in, which is essentially the bank saying that they will take your deposits and use it, and they usually issue some kind of stock like they did in Cyprus, where instead of your deposit, you end up with bank stock. Or they can do a bailout. But I think with the record levels of civil unrest and rioting right now, if the government proposed to bail out any of the banks as a result of this, I don't think they could get away with it this time. So what I'm forecasting is that they will actually allow the banks to go bust this time, but they don't want depositors to lose their money. The way they can do that is through a central bank digital currency, which every central bank in the world has already been working on. And that central bank digital currency could be, let's say you had $10,000 at Chase Bank, and Chase Bank was not bailed out this time, then you could download an app and it would contain $10,000 of a central bank digital currency. And that money is debt-free money. Essentially, you're taking all the over-leverage of the bank and you're replacing it with debt-free money issued by the government or the central bank, just like they issued the greenbacks to fund the American Civil War. But this time it will be fully digital. And they can put a stimulus package out there. Their next round of helicopter money could be download this app, we'll give you the money, and they deleverage the leverage in the banking system and replace it with a central bank digital currency is what I think their next move is. And so essentially that's central bank taking on all the balance sheet of the world and becoming a bank and issuing API keys, allowing financial technology companies to build on top of it, and moving to a more peer-to-peer financial system. But it will be very, very expensive, as I said, in terms of the impact that currency has on your freedoms, your liberties, and your privacy. It's going to not be a very nice currency in any way, shape, or form.
Yeah, I actually see something very similar, and that's interesting you bring that up. I want to talk about that. But before we do, just to kind of pre-frame that for the listeners, typically the way that it's been done is the central banks have been creating more debt, and they've been doing that, as you said, really through quantitative easing, which means that money really goes into the banks, and it really just goes back to more financial assets. It's never really been given to the people until just recently with this pandemic, where they gave a little bit. I mean, $1,200 to some people if they make under a certain amount of money or whatever, right? But what you're talking about is something different, where instead of bailing out the banks and the financial system like they are doing today, you're saying they might just say, screw those guys, let's just go and bail out the people directly.
Yeah, so you got to look at when each debt cycle creates a greater level of debt from consumers, businesses, and governments. And all of that debt needs to be repaid plus interest. Well, it doesn't need to be repaid because it's always rolled over. And as long as the credit rating of the US government is okay, they can keep rolling it over for as long as people will take it. Each inflation is not just, for me, just an increase in the money supply. It's also the factor in the interest of all of this debt. So if you have to service a lot of your debt and your debt levels are increasing at every cycle, you inevitably have to put your prices up to factor in the interest on your debt. And so inflation is not just, in my perspective, a monetary phenomenon, but it's also interest rates and debt phenomenon that is factored into the equation. The interesting thing is that if you look throughout history, that money printing during a depression has always been non-inflationary in most cases. But if you continue to imprint the money supply and increase the money supply during a bull market, as you start to enter a recovery, you start to get a destructive effect on the currency in terms of risking moving into an inflationary environment, and if it goes terribly wrong, a hyperinflationary environment like we've seen in many countries. And so it's not a very desirable outcome to do that. And I think that yeah, the factoring in all this debt into the equation means that at this stage you need a complete renegotiation in order to get out of that.
Yeah. As far as the end game, which you already kind of highlighted, which we're going to dig into, I mean, I kind of see the same thing. But before we do, I'm trying to kind of understand what triggers that, because if we understand what triggers that, it also has implications of what that solution is. But before we get back to that, just quickly, I mean, so we're talking about the money creation and when will it stop or whatever. And so we have, I know you've talked about, maybe a few different types of money systems or economic schools of thought, Keynesian, monetarism, Austrian. We have a new school of thought, maybe if you consider it that's really being pushed today. And I think depending on who wins the election, we're going to see it really make some inroads, and that's MMT, modern monetary theory. And so we have the economic advisors on the Biden camp trying to push this Green New Deal, or now he's calling it the Biden deal or whatever it is. But essentially it's committing to spend 30 to 90 trillion dollars to rebuild the system as a renewable energy. And let's not, I don't want to dig into that policy, but the fact that they can just go spend 30 to 90 trillion dollars, where does that money come from? It's obviously this MMT of just being able to print money. I mean, will that work? Can they continue just to print that money? And if so, won't that hold off this debt collapse that you're talking about?
Yeah, so modern monetary theory is, so if you look at the system you were just talking about, the prevalent way of money creation at the moment is through quantitative easing. And what that is the central bank just creates money, which is a digital ledger in their balance sheet. And then they use that money in order to purchase government debt. And so the government is actually borrowing the money and having to pay interest on that money for money creation from the Treasury to the Federal Reserve. And that is a really, really inefficient system. There's no point the government borrowing the money when you start to actually understand the mechanism, because the government already has the ability to create the money supply. It can do that as it chooses, but instead it outsources it to the Federal Reserve and has to repay and factor in all this debt on top of that. So modern monetary theory says, well, why doesn't the government just create the money in its own in the first place and not have to factor in all this interest and debt? The reality is the effect is exactly the same, but it's much more efficient because you can remove away this pretense. You can stop having these forms of money that no one understands, M, M1, M2, M3, M4. And you can just have a money supply called M, which is the government creating money, deciding how to spend that, and then the people judging whether they create inflation or deflation based upon a transparent form of money supply. And if the government destroys the money supply, you know who to blame. You don't get this game of the Federal Reserve blaming Treasury, then socialists blaming capitalists, and all of the typical left-right wing arguments that we have today. If you accept that governments can actually create money rather than actually doing it indirectly and giving it to essentially today we have a private form of money, which is that banks create it every time they issue a loan, or the central bank creates it every time they borrow. They decide to spend more money in the government, and the government borrows it from them. Why not just actually have a transparent form of money that's actually created by the government? I hear all the free marketeers and everyone like rolling over their graves and concerned about that. And I too would be concerned about it. But thankfully, we have competing forms of money today where if you don't like that, you can opt out. But yeah, modern monetary theory states that the government can just simply spend it into the economy. And in effect, rather than banks actually lending it into the economy, you just have governments doing what essentially most people think governments do, which is providing the money supply to the economy.
And maybe that then ties into kind of what you see being the solution. So you talk about, all these people with money in the bank and potentially losing the money in the bank, but also all the obligations, the pensions, the 401ks and things like that, Social Security, et cetera. So all the obligations. And so if the system collapses, all those people that are depending on their money or their income or their retirement could potentially see it go away. And you're saying that if that were to happen, that I think the banks or the government would, instead of bailing out the banks to give the people back their money, they might just give the people back their money directly through this new CBDC, this central bank digital currency, and even maybe pay for all the obligations. And so maybe at that point it switches from bank-based issued money to government issued money.
Yeah, we essentially move from capitalism to socialism, and that is where I think we're headed. And if you want to get more extreme, then some governments will opt for communism. But we can already see that the writing's on the wall in that sense. So what I'm interested in is accepting that with fiat money, the end game is 100% tax. Is communism, is riots in the streets. That's the end game. And I don't think there's any fighting that because of the cycles that we're in. The only alternative is to actually move back to sound money, cause a depression, cause a recession, accept that their real estate is massively overvalued. We have to have ginormous asset price deflation, and monetary inflation as well, probably. So that's the alternative of trying to combat this system by returning to a gold standard or exercising. If you were designing a system from scratch, that's probably what you'd come up with. But now we are where we are.
In regards to that, though, so you talked about, at the end of whatever, World War I and going into the Great Depression, a lot of people blamed it on the gold standard because I think over in, England, they had printed way too much money to fight the war. And I think Churchill said, hey, we can't go back to the gold standard because, or no, it was actually, I think it was Keynes warned Churchill, hey, we can't go back to the gold standard because we'll cause massive deflation. We've printed too much money. So what we have to do is we have to double the price of gold. And if we double the price of gold, things will be okay. And Churchill said, no, that's not going to happen. And then they revalued back to the original price of gold and everything collapsed. I mean, that seems to be the history that I've read. But without digging into that, but back to kind of what you're talking about, we have to deflate the assets. Couldn't we just increase the price of gold to 50,000 or 100,000?
Yeah, I mean, so that's another solution. If you subscribe to some of the gold standard, and these are all viable solutions. We can return to a gold standard, decide on gold in order to make that feasible. But I don't think there's any political will, and I just don't think it's something that governments want to do.
That's the alternative.
The alternative to that is they can have complete control over our money, all of our freedoms, how we spend our money, what we do with our money, how to tax the money, and it can move it to the end game, which is socialism and more communist-style society. Even the right wings are moving the economies over that way. Don't think this is a left-right argument. The systemic nature of creating money as debt drives you to 100% tax as the end game. It's the only game you can get from the system. And so fiat money is just inevitably moving in that direction, which is why I think the important part is to have opt-out and have alternatives that people can actually make choices with.
Yeah, I agree with you, right? I mean, we just understand human nature. They're not going to wake up tomorrow and be like, oh, let's live within our means. Like, they're never going to opt to go back to that. And so I say they're going to go till they blow, right? It's going to go till it doesn't work anymore. But I also agree with you, and it's a great point, that they constantly want more power and constantly want more control, more surveillance. And so it helps them establish both of those. So let's talk about that. So I was kind of thinking similar thing to you, right? The banks collapse. We have FDIC insurance. But instead of saying, hey, we'll just give the banks back the money, let's just swap it out for a central bank digital currency. I've talked about on the channel that we already know that they're already working on it. The Fed's already said it. They've hired the execs from Coinbase. Probably early next year, we probably see this. And so how do you think that transition works? I see that a lot of the population maybe isn't ready for that. I mean, how do you see that kind of rollout happening?
Yeah, it's really easy. It won't look like Bitcoin. It won't need a blockchain. It doesn't need any of that stuff. It just needs to be a digital ledger that they sit. In fact, they already do it for the private banks right now. If you have a clearing bank account with the central bank, like the large clearing banks do, then there are just digital ledgers. This is how the repo markets work. This is how all the large markets, money markets for banks work. They're just simply digital ledgers held at the central bank. So the easy way to roll it out is you just keep stimulating like you are right now. you commit to unlimited QE, you do everything you can to try and win the next election. And then at some point during the next year or two, some kind of systemic risk event is going to happen, as it always does. This one was a pandemic. The last one was a crazy little island like Iceland that got taken over by investment bankers that exposed the global financial crisis, completely globally. And so this could be student cards, student debts. This could be credit card debts. Take any one of those Ponzi schemes, Social Security, whatever you want to pick. One of them is going to show their weakness. That will expose one bank, and one bank will be exposed to that. Or it will be your pension, because the banks, what came out of 2008 that never went away was the repackaging of their debt so that they don't have to take the risk, and then they can sell it to your pension with a AAA grade rating on it. That still exists. And so many of the banks are in a good place because they've repackaged. That's why Warren Buffett is dumping some bank stocks and keeping other bank stocks. He's getting rid of all the bank stocks that are over leveraged and that will be exposed to these events, and keeping his Bank of America because they may not be over leveraged to these particular products. And so, what I think will happen is you'll get one of the banks that will be exposed. That will then show the house of cards. FDIC can no way insure all of your deposits. Right. FDIC is simply, they hold their money in treasuries, which is the government debt. They don't have cash because they can't hold cash, because then they'd be exposed to whichever bank they're using to insure the banking system.
Right.
And so FDIC is built for one or two banks going bust, not the entire system going systemically risk. They've only got 1% of all the deposits in the bank is actually insured by FDIC. So it's not designed to actually protect the system. So that at that stage, you need to bail out FDIC. Remember, before FDIC, there was FSLIC, which is the equivalent of the insurance for the savings and loan scheme. That was, that went bust. It couldn't insure what its liabilities. So it got rolled over into FDIC. So the deposit insurance protection schemes that are available, they can't tackle systemic risk events. They can only tackle one financial institution or two being exposed at this time. So the way that they could roll it out is let the bank go bust. You then get to align with the people that don't want to bail out anymore. They don't want all the money, the taxpayers' money, going to pay bonuses. And you just simply sell them. Well, how do you get traction for your new digital currency app? Well, if you had $10,000 with this bank, download this app, you now got $10,000. If everyone would like, in order to stimulate this economy, if everyone would like $10,000 for free, download this app. And then you're going to have to opt in to giving away all your freedoms. You're going to have to opt in for compulsory vaccines. You're going to have to opt in for automated tax collection. You're going to have to opt in for every kind of freedom and liberty, that you've got being taken away one by one. Why? Because we've got this pandemic, just like we had after the last 9/11. We had the ultimate reason for you to opt out, which is fear, and it's genuine. This is a systemic event, and you have these inevitabilities that expose the weaknesses of the systems. That gets everyone to opt in. And already all the financial technology companies can build on top of the API of the central bank. And they can, the central bank doesn't want to do customer service, but they'll open up their API, and other financial technology companies can do that. And even banks will, come back again as the CEOs of those banks will leave that, create their own fintech startup, and build on top of the new system.
Yeah, and we're already seeing that foundation built. I did a video talking about FedCoin, what we're calling it, and the Fed rolling this out. But all the banks that are tied to the Fed that are able to create the debt for the Fed are required now to build out their own wallets. And so they're already prepping for this and to be that customer service arm of the Fed, if you will, something like that. Do you see this just happening through dollars first, or is this kind of like a global thing that happens all at the same time?
That's a really hard one to forecast, because I think, the US credit rating is still very, very strong. People still consider the dollar a store of value. They still consider it a flight to safety. And it's a very, very strong currency in terms of its power, its purchasing power around the world. You know, of my fiat money, I still hold most of my fiat money in dollars. And I wouldn't consider holding it in anything else other than the money that I need to spend in my domestic currency. So I think the US has still got a bit further to go. I think in terms of the monetary renegotiation, who gets a seat at the table, I think it will be based upon who has the largest gold to GDP reserves. So you've got Russia, you've got Europe, which is essentially Germany. You've got China, and you've got US. And I think they will be the ones that will be renegotiating the new monetary system in the next few years.
So you think this rollout of the digital currency is an interim step into the new monetary system? So it's not the new monetary system; it's kind of what leads up to the new monetary system.
Yeah, and you've also got competing forces like the IMF and the World Bank. They all want to list. They all want to list their own global digital currencies. They are, you know, their position to be the end game of rolling up insolvent central banks. And so it all depends on the strength. I think so, you know, a bit of policy. If I were advising a smaller central bank right now, I would be advising them, and I have been advising them, to take an asymmetric bet on Bitcoin. I think in several years back, I released a video called what was the video called? How Bitcoin could become a global reserve currency by 2020. It's not meant to happen that way, but it's an extreme example of, if you are a country like Lebanon, and we're starting to see this in Iran already, in order to get around sanctions, Iran is dedicating some of their electricity to mining Bitcoin. And if you have a currency like Lebanon that no one wants, you can't use it to purchase any mining equipment, but you might have spare electricity power, then you could use it to mine Bitcoin. You could give it to your central bank in order to hold it on some of its balance sheet. You can make an announcement to the world that you are diversifying from the dollar, gold, and treasuries, and you're holding some Bitcoin. And that would create such a FOMO, a countrywide FOMO, and big impact on the price and the market cap, that you would end up in a situation like Bulgaria was. You know, Bulgaria, several years back, they confiscated 200,000 Bitcoin from an illegal crime group. And those 200,000 Bitcoin, by the time they actually got through and got those, it was worth more than the entire country's national debt of Bulgaria. And funnily enough, due to crony capitalism, those Bitcoin just disappeared to politicians' wallets and never found themselves on the central bank's balance sheet or the government's balance sheet. But I think it highlights the fact that you can have an asymmetric risk, just like individuals can now, have an asymmetric risk on Bitcoin. I think governments, I think central banks will, I think businesses already are starting to. We started to see, businesses announcing that they're holding their reserves in Bitcoin. We started to see hedge funds already saying, Paul Tudor Jones saying that he's going to hold 1% to 2% of his hedge fund in Bitcoin. Why is he doing that? Because if he can outperform the hedge fund industry through holding Bitcoin, then all the other hedge funds have to adjust to that, and he gets a higher, he gets the highest performing hedge fund, as it has in the crypto markets. And I think that translates to central banks. Now, the Federal Reserve will be the last to do that. They'll be holding on to the end. Why? Because they're the incumbent. So this is a game of the disruptors disrupting the incumbent in a ginormous game of global currency wars that is determined by how much gold reserves you have and who's going to be bravest and first to Bitcoin. That's where I think we're headed over the next 5 years.
Yeah, that's interesting. Over the next 5 years too. It seems like the thing with currencies, and this is where I lose a little bit on the central bank digital currencies. And I think this is what you're alluding to, but you can correct me. But it seems that all currencies at the end of the day are only as good as we think they are. They're built on trust. And that's why and people say, oh, it's backed by the military. But you look at Venezuela, well, they had a military, but still nobody wanted to use the currency. It was lined the streets with, trash, right? And so if the currency gets destroyed, the government can print as much as they want and give as much as they want, but nobody may want to use that. And so I think that's kind of what you're saying, where well, hey, we're going to print more money, and hey, we're going to give you 10,000 of this new currency, but people don't want it. And so then they go opt for something else they think holds value, or they can trust better, like Bitcoin.
Yeah, I mean, it's it's about different use case for different money. So fiat is still a very useful form of money to me. If if I want to make short-term expenses, I hate using Bitcoin for short-term expenses.
Yeah.
I bought my house with Bitcoin, and it was an absolute nuisance. It took, 9 months, because the seller would only accept fiat money. And so I had to prove the source of wealth to the bank. And I had to show them how I acquired those Bitcoins the day I acquired them, showed them on the blockchain, showed that they weren't the proceeds of crime. And that whole process took about 9 months to get signed off. And during that time, the price of Bitcoin, went from around about $20,000 to $3,000. And if I was trying to, make a transaction in that time, it's really, really challenging to do that if you're spending in fiat, personally. But when it comes to savings, I don't keep my money in fiat currencies. I only keep my money in fiat currencies to the amount that I want to be spending over the next few years. Because it's useful for spending. And I've seen many people. I spoke at the very first Bitcoin conference when it was about 40 people in a room, through today. And I know people that were there in that room in 2011. I've seen my Bitcoin crash from $30 to $3, from $1,250 to $250, from $20,000 to $3,000. I expect it to crash from $100,000 to $30,000 too. But I saw people in that room that still are not wealthy, that were there right from the beginning, because they tried to manage their financial affairs with Bitcoin. And so they always had to sell it to meet living expenses. And I saw so many people that done that. It's to me, it's a challenging currency. The day, or if Bitcoin ever prices things in Bitcoin, then fine, you can manage your financial affairs. But I still think that fiat is still going to be, we're not going to start thinking in terms of my milk costs 0.0132678 Bitcoin. Our brains cannot compute that. We're and global as well, because there's so many differentials around the world. So I think fiat currencies will be there. We just have to accept that the money that you hold in fiat is money that you can't own, you can't spend unless you get permission and you do things the way whoever the powers that be say you do it that way, and it won't maintain its value. So I'm fine with my fiat currency. I know that if I put it in a bank, the bank's the legal owner of that money. I'm lucky if they give it back to me. I know that if I try and spend it, I'm going to have to send them loads and loads of documents and make sure that I only spend it on something that they think it's okay to spend on. The same with the central bank digital currency. And I know that it's going to be worth less in the future. And I'm okay with that because it's useful for spending short term. But I'm definitely not going to keep my savings in that. And I'm not going to be surprised when I download this central bank digital currency that it's going to be connected to my passport. And if I try to get on a plane, if I haven't had the right vaccine, they're probably going to switch off that wallet. And I'm also not going to be surprised if me and you are on a Zoom call and this is being routed via a server in China, that the Chinese central bank, the Federal Reserve, and the Bank of England, I'm in Isle of Man, which shares the Bank of England, they're all going to want to automate their tax collection. And then I'm going to have to go to 3 different central banks and try and prove to them that, I paid my tax here, therefore I shouldn't pay my tax here. And if I don't get that settled, I also know that my passport's going to be switched off until I settle it. I just know that that's where the world is going. So I'll only hold an amount of money that serves that utility. The rest of it, I'm looking to hold it in money that I can own, money that I can spend, and money that I know is not going to be devalued over time.
Wow. You paint a very grim future, which I wish I would like to challenge you on, but unfortunately, it's just where things are going. And
99% of people won't be affected by this because 99% of people are living month to month. And as long as people are living month to month on debt, they don't get affected. If you've got less than
they will be affected in as you said, their liberty, privacy, freedom, right?
Yeah, but it kind of only those rules only really start to kick in once you've got a balance. and most people don't have a balance; they're in negative.
Right.
And so, if I try and spend $10, they're not gonna. That's gonna go fast. It's just gonna be moved. If I try and move $100,000, you're gonna have to answer a lot of questions.
Right.
So this really is. And that's why they're petrified of a saving-based economy. It's why in America they made gold illegal, because they don't want you to hoard. They don't want you to save. They want you to be in debt. The economy relies upon you being in debt. And the more and more that you can service your loans, the more the banks are happy. They don't want you to repay your loans. They just want you to pay interest forever. Repaying the loan means that they have to go out and find another loan and deploy the capital. They just want you to cover their interest, and they want you to have just enough money so that you can cover that loan. They want you to go to university so that you take on that student debt. And then they want you to start getting into real estate so that you start rolling over that debt. This is how the system is. And it's just being rolled over and rolled over. Yeah. On the plus side, this is one of the most exciting times in financial history. There's so much innovation happening.
Yeah.
It doesn't have to be a bleak. It only has to be a bleak outcome if you're not getting involved in what's happening. And that's why, education like what you're doing and teaching people all these new opportunities and alternatives. On the flip side, it's like I could feel a little bit guilty because I've got deep empathy for people's personal financial situations at the moment. I've been there. I've been in debt. I know what it's like, to not be able to get on the other side of the rat race. When I first started my business, I was 100 grand in the hole. And I know the types of financial anxiety people have, when you're just rolling over your debt. It's not a nice situation. But on the flip side, this is one of the most largest wealth distributions that I think we're going to see. And you know what's good about it? What's interesting about it is you have the choice to be on the other side of that as well, because it's not just a game for those that are connected to quantitative easing money through central banks. It's not just a game of crony capitalism anymore, where the investment banks get access to the cheap money and you pay the high interest rates. This alternative financial system is being built, and there's lots of scams and problems involved in it. But anyone can be involved in it. So, that opportunity exists for everybody.
So I know we're running long, but hopefully you have a little bit more time, because I'd like to just ask you about that. So you said that, although things seem bleak, at the same time, they're full of opportunities. And so people who may be on the other side of that, hoping to get away from that paycheck to paycheck or behind the eight ball kind of a thing, have opportunities. So could you tell us what that opportunity is? How would somebody who's afraid of this but wants to have that better life you're talking about, what kind of things should they be looking at or doing or thinking about to make that jump over?
Sure. Well, first thing is to actually make a decision to take control of your financial future. That's the first thing. That's a psychology game. That's you understanding what's been getting in the way of you achieving that to date. There is systemic things. The system wants you to be in that way, but you've got to break that cycle. Once you've made that decision, take all the debt that you've got, put it on a piece of paper, understand what it takes in order to get over that. That's what I did when I was deep in the hole. Write all that down, understand what your situation is right now. And then you just have to make a decision that I understand, if whatever your career is, whatever your opportunity is, whether you're a business person, whether you're working for a company, whatever you decide to do, you have to make a decision from here on in to spend less than you earn and invest the difference.
Yep.
And that's just the reality that's, if you can get over that, then you just got to think about, well, what can I invest in? And that's an education game. One of the things I'm excited about is just to answer that very same question. I'm actually going to be taking $1 million of my personal savings. Imagine that I had nothing. And it doesn't matter. This could be $100. This could be $1,000. This could be 10 million, 100 million. The numbers scale because the products are available at any level. And I'll be showing them how I'll be investing it during the Great Depression of 2020, releasing a video series on that.
Wow.
Of exactly what I'll do. And that will be preparing for inflation, deflation, economic growth, economic decline, and a plan B that the entire financial system collapses. You've got to be prepared for everything, because this is 100% politics, and you don't know what the politicians are going to throw at you next.
Definitely. It's not the time to the old way of just 60-40 mix and just sit there, and 20 years you're going to be okay, right? Now is the time to be what I call tactically maneuvering around this. That's a great thing. Well, if I can, one more question. So you talk about there's kind of two opposing things. So one is that we're moving to this totalitarianism, environment where the banks have these digital currencies that they control and surveil every area of your life, and they want that. They don't want to give that up. But at the same time, you talk about there being competing currencies which give us that ability to get out of that and have this free life. Of course, being a free market guy, I believe that competition always creates better products, better services, better prices. And so we want that, but the powers that be don't want that. So there's like going to be this battle between like total control, China, the US, whatever are going to want, and then maybe these smaller kind of competing things. Do you think the competing markets eventually win? The totalitarian, the Fed and the China banks lose? How does that play out?
No, I actually believe in yin and yang, and I think we're going to have these different systems. So, the reason I'm so excited about Bitcoin that it's got this far, and it's a miracle that it's got this far. It was never meant to succeed. I never imagined it would get this far, but it did. And thank God that we've got it. And right now it's virtually impossible for any government to take down in terms of some of the key risk factors. Yes, they can make it illegal in one country, but then that will be an opportunity for another country. And I think that we can see that. But yeah, I do believe in a yin and yang. I don't think it's one system wins, because Bitcoin could end up being in the hands of a very few people, and it currently is not in too many people's hands. And it could end up being, a ginormous wealth creation, and the next round of Bitcoin billionaires become the next JP Morgans and all sorts of stuff like that. But there is a difference because it is built upon sound monetary principles, but it may not work with the redistribution effect. I'm hoping that more and more people get on board at this stage. When the good thing about Bitcoin is the majority of the world still think, when we first started, no one had heard of it. But now everyone's heard of it, but the majority of the world still think it's a Ponzi scheme, a currency for drug dealers, or a scam. And that's what creates the asymmetric opportunity, because each year more and more people realize it's not a scam, it's not a currency just for drug dealers, and it's not a Ponzi scheme. And every year for the last, since I've been involved, more and more people realize that. And so the market cap goes up and the utility goes up, and more people try and buy it at a higher price. 10 of the last 12 years, the highest performing asset class. Yeah. And so, the opportunity to be involved in money that you can own, money that you can spend, and money where the supply can't be changed, is something that anyone can actually take on, and people will get involved in that at different stages, depending on their cognitive dissonance or when they decide that it's right for them. And I do believe that Bitcoin is actually regulates the regulator. And by that, I mean that we've always had this problem of absolute power corrupts absolutely. And you give regulators power, and then you have crony, capitalism and corruption within the regulatory environment. And you have all sorts of checks and controls. So another regulator comes along to regulate that regulator, and then that one becomes corrupt. And you have all these regulators that sit on top of regulators. But when you have a monetary system that allows you to own it, allows you to spend it, and allows you to have a fixed supply, my hope is that we get much, much better fiat currencies, because I really don't want the banking system to collapse. That hurts my mom, that hurts my grandma, that hurts my sister, that hurts my brother, and that hurts everyone that I know that's not prepared for this. Mm-hmm. And almost everyone I know is not prepared for this. We're a tiny, tiny community of monetary reformers or Bitcoiners or all these people looking at this stuff. I know that I'm in a position where I'm going to be okay no matter what happens. That's how I've set myself up. But most people won't. So I don't want the banking system to collapse in order for my Bitcoin to do well. I would like the fiat to get a lot better. And so Bitcoin performing this task of regulating the regulator, whereby if people have a choice to exit that can't be stopped, therefore, they have to just make a better system. And that's what I hope. That's what I think the good outcome of all of this is, because fiat currency is still very useful. We use it for a reason, because it's useful. We don't want to go back to a barter system. It's a convenient, it's a human. If you took money out of the world, humans would reinvent it every time, because it's more convenient than not having money. and having to, trade. So I do think that there is a good outcome that comes from all of this. But there's a lot. I just wish that we didn't live in such a speculative environment where you as a person, you have to learn how to speculate, because if you're not learning how to speculate, someone else is speculating for you. Just leaving your money in a bank is a bet on the credit risk of that bank and the credit rating of the FDIC and their ability to do it. Putting your money in real estate is a speculation that banks will continue to increase the mortgage supply that pushes up real estate, that continues to push up prices. Investing in a 401k is a bet that the financial system has your best interest at heart, and that all of these different things. So we only have one choice. Either you learn how to speculate in a speculative economy and prepare for different outcomes, or you outsource your speculation to someone else. And I can assure you that they don't necessarily have your best interest at heart.
Yeah. Wow. That's such a great point. And I think we'll just end it with that. I think it all goes back to the money system. It's not a good store of value, but you need to be able to park your wealth, as Simon just said. So, man, that was great. And I know we went over, so I appreciate you taking that extra time for us. Such a good conversation. Simon, I know you talk a lot about on your own YouTube channel. So you do have a YouTube channel. I'm going to make sure to link to that in the show notes. Where else should somebody go to keep up with you and follow what you're doing?
Yeah, so I mainly live in 3 different places. Simon Dixon is my YouTube channel, which is where I release content as the economy unfolds, and I'll be releasing that video series on how I'll be investing $1 million of my savings in the Great Depression of 2020. On Twitter, at Simon Dixon Twit. I also, my company, banktothefuture.com, is for those that want to invest in the equity and stocks of financial technology companies building the future of finance.
Yeah, great. Well, such a great conversation, Simon. It is definitely interesting times that we're in, and exciting if you're in the right position and observing like kind of we are. So anyway, thanks so much for coming and talking to us today.
Yeah, pleasure. And I really appreciate what you're doing, educating people in plain, simple language. I think that's so important for people to learn all this stuff.
All right. We'll see you later.
Bye-bye.